FedEx, I feel like, first on Disney, one of the things that people aren't talking about a lot with Disney is that they are going into this B2C. It is ramping up. The numbers are a little shaky there, but it's going to be fabulous. They're also getting access to data from all of those customers who are signing up, and I think that's going to be a big ad there, too. FedEx, You're
aware of what's happened to FedEx this week, right?
I have noticed that FedEx has been a bit weaker. It's been a bit weak. This is when I think you buy a stock. Look, I've liked this stock for the past year. It's hit a wonderful storm of their B2B, and we've had a global slowdown. We've had B2B shipping slowdown. They've had a lot of headwinds. They are somewhat economically sensitive. I feel like, what was it, Unbroken, the Louis Zamperini guy sitting there out in the yard holding up the big telephone pole with that stock. I think as you look forward, when you're able to buy a company at these levels, at this kind of a discount, next couple of years, I think we make money here.
Anybody want to take that on? Feels like a lot has to go right for FedEx to get back.
I bought a little for a trade. I sold it on the in the aftermarket when they reported earnings. I still think there's
you couldn't hit the sell button fast enough. I remember you telling me.
No, I got out great. Surprisingly. But I thought they'd do okay last quarter and the quarter before. It's 4 quarters in a row. So I'm believing. I don't know if I'll be there when they report, but clearly management has an issue being able to analyze their business going forward. I mean, to miss 4 times is ridiculous.
On e-commerce, the business has now gone to a place that may not ever be as profitable as FedEx and UPS's bread and butter. If the consumer now expects to get something 3 hours after they order it, and companies are racing to deliver that because somehow Amazon is, that just doesn't strike me as business that gets better in year 2 or in year 3. I think that's always expensive business.
So let's do this because we don't have that much time. Microsoft, a lot of people like Microsoft. I get it. Lowe's has had a good year.
Yep.
Chevron. Let's talk Chevron. Why?
Can't we find some that have just gone up a lot and that are very comfortable to talk about? Chevron.
Well, I'm making you're a contrarian.
So
you want to play contrarian ball? Let's play.
Exactly. So they've had oversupply fears for a long time. Demand is still growing very slowly there. I think Chevron is very well positioned. Chevron's very well positioned. $219 billion market cap. It's 19 times earnings. Going to grow earnings at 8%. And you got a 4% dividend. I think the total return on this stock is double digits as you go forward. Great, solid company.
Okay, here's what we're going to do. On our website, we're going to put the rest of the names.
The rest of the names.
Under Michael Farr's top 10 for 20.